Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Dan Connor of Ascend Venture Capital. Dan, thank you for joining us.
Thank you. Happy to be here.
Great. So what was your background before you started investing in early stage companies?
So in a previous life, I was an engineer, mostly offshore and mostly international. I was working as a performance engineer on oil rigs straight out of college and made my foray into some more diverse technologies after then in biofuel conversion, for example, and offshore wind farm construction. And then came to St. Louis to go back to school. I got a master's in energy engineering and then an MBA. And then the chrysalis of business school, I got turned into a finance moth. And then I shortly thereafter made my way into the venture space and working with a startup of my own with the eventual goal of ending up in the venture capital world. And ended up getting poached by a local Series A to C investor that was itself a startup at the time, and worked with them for a couple of years and never looked back.
So you invest in the enterprise sector these days. What led you to go after that sector versus the other ones?
I think there's a lot of advantage to be found in that space. I think that my fund is a micro VC and limited in resources. So I have $5.5 million in assets under management at this point. So I can't really write the checks that are required to see that an investment in the business to consumer space can be ensured of success, or virtually ensured of success. So that kind of led me down a narrower path of, how can I find a toehold in the industry? So the enterprise sector is definitely one that you can identify gems or needles in a haystack for a fund. So that's what led me to that space.
So we have a lot of investors that listen to the show, and we always like to share some words of wisdom. What's your advice for people investing in the enterprise sector? What would you tell them to look for?
So my biggest piece of advice, or what's worked for me, is that I'm not afraid of doing the legwork. So pulling down long lists of literal thousands of companies and sifting through each one to identify opportunities and subsequently build conviction around one per 500. That process of culling down a long list to a much shorter list of favorites doesn't really scare me. But if you do that process, you can find opportunity. There are great companies all over the States. There are still brilliant entrepreneurs as distributed around the country. And it just takes a little bit of legwork to find them.
Great. So how do you see the enterprise industry evolving, especially in the sectors that you're in inside there? What do you see happening these days? What are the trends?
So I think the larger macro trends are generally, number one, that there's a good amount of scope creep, in the sense that investors have a luxury to wait for the most sweetheart, lowest risk deals that come their way. So what that means is that the companies with the highest amount of traction for the amount of money they've raised in the past generally get funded earlier and earlier. So what that means is that the traction metrics, or the metrics by which investors judge companies, tend to correspond to earlier and earlier rounds. So a company that is hitting $1 million in ARR used to be 15 years ago a Series B type threshold company, and 5 years ago that was definitely one hurdle before you could even start to think about a Series A. Now you hear seed investors quoting that metric for their potential companies. So scope creep is definitely one way that the industry is evolving in enterprise investing. Another one on the other side of the token is there's an increasing amount of selectivity when it comes to further down the line in the life of an investment. So, for example, corporate or strategic buyers aren't taking an approach where they shoot a shotgun blast and hope that one of their buyouts is gainful for them materially. Right now, they're turning much more toward very selective picks in the industry to help them move themselves along materially. And that is happening in the private equity space too. The number of deals is significantly lower, and the size of those deals is increasing. So I don't expect those trends to slow or cease in the future. But that means that as an enterprise investor, you have to keep in mind the way that the future of your potential investments.
So the deals that are like $1 million of ARR and they're now doing a Series A instead of a Series B, do you think that's just because the industry is getting more efficient, there's a lot more tools, and they can get to that altitude much more quickly, or do you think there's something else driving it?
I think it's just the appetites of the buy side. So investors have this luxury to look at a broad spectrum of companies and a high number of them. And their favorites are going to have the lowest risk attributes in them. So generally, if you can sift through to those lower risk deals, then you're going to take the latest traction metrics you can find for the round that you're considering. I think that, yeah, it's possible that the last string of years would have created an environment in which a startup company could achieve a high growth metric or growth trajectory earlier on. So yeah, it's certainly a possibility.
So what's your investment thesis for the enterprise sector? What are you looking for when you're evaluating a deal? What points does it have to hit?
So I'm generally looking for investment opportunities that are once in a generation opportunities. So think about, for example, aspen trees. So aspen trees are a whole forest of aspen trees can be a single organism connected by a massive root system. And right now, given the pace of climate change, the habitat for existing aspen forests is dwindling, but new habitats are opening up, and that opportunity hasn't been around for centuries. And so if that could be seen as an investment, that is a potentially powerful organism that could be established in a green field in our lifetime. So that is probably the strongest corollary to what I'm looking for is these undeniable trends that are happening in different pockets or industries. And I'm looking for the unique company or the company that's approaching the space uniquely to essentially become the leading company in that space. So the kind of attributes that engender that kind of company for me is when you talk to the founders, are they obsessively focused on it? Are they ambitious enough to own the entire space and not just a niche in the space? So another attribute is that they've identified what their customers see as a mission critical problem, something that they can't live without once they hear it from the company. And then are they offering an advancement on the current metrics that the customers live by an order of magnitude, right? So are they offering 10 times better metrics if you work with that company?
So what startups in your portfolio fit that thesis that you can point out to be good to see some examples?
Yeah, so probably the best example of a company that hits all of those characteristics is a company called Freightwaves. So Freightwaves is in the trucking industry. They just launched the crown jewel of the company, which they've been building for a string of years, which is a futures exchange, a financial exchange for derivatives contracts on the trucking industry. So nobody else has done derivatives trading in the trucking industry before. So that's obviously ticks the box of it being unique. And a financial exchange in order to be traded actively, has to have a thick market on both sides of the marketplace. So in order to get there for Freightwaves, they have to be quite ambitious to invite the participation of essentially all of the major players on the shipper side of the equation and the carrier side of the equation. So obviously a great amount of ambition there to be a startup that has designs on connecting with every major player in the space. And then the mission criticality of the solution there is that in the trucking industry, the volatility of the spot price of trucking, the cost of what it takes to move a Walmart shipment a mile in a white tractor trailer in one part of the country is incredibly volatile. It's actually 4 times more volatile than Bitcoin was at its peak.
Wow.
Yeah, it's an incredible amount of volatility. And for the carriers, the folks who actually own the trucks, the industry-wide profit margin is 4%. So when you think about that, if the price moves against the trucker and persists for weeks, their going concern is hindered, right? So it's a very mission critical problem to potentially hedge them to be able to hedge them from the sense of if they can place a bet that says, if the price moves down, I get some financial gain, though my operational loss might be material. The financial gain that I get from my futures contract that I entered into is offsets that loss significantly, and I can stay in business. That's probably one of the best fits. As far as a current metric solution that offers a 10 times improvement, there's a company in the portfolio called Astropi that's a satellite tech company. Essentially, these guys have figured out a way to encode any waveform signal with 10 times more data. And signals are as widespread as AM radio to satellite communications to cell phone towers. So a 10 times advancement on how much data you can send per millisecond could upend some major industries from IoT to 5G and 6G. So it's an interesting one.
Well, that's great. So it's always been an issue with enterprise that it takes a long time to design those into customer systems and get recurring revenue SaaS up and running and so forth. And I always saw that as a challenge. But what challenges do you find working with the enterprise space?
Yeah, that particular one is interesting. I think that you have to have your head in the right place when it comes to what kind of sale are you making when you meet with a customer, right? Some products lend themselves to a zero-touch sale in which a customer can find the product on a simple internet search, find your website, and navigate through to payments and starting up with little guidance at all. And then there are others that you have to meet with the company's board in order to convince an entire room full of people to start up the product. Then they have to meet as a committee and then confer a decision, right? So understanding well what the type of sale you're making is an important one. And as far as other challenges, I think the sales cycle is obviously one. And then operationally, there's an expectation by the Series A round that a company will have put into place all of the processes and playbooks that can propel the company to scale without slowing down, right? So that every dollar put in at the Series A level is essentially going toward enlivening sales, right? So at the Series Seed and thereafter, a company needs to really start focusing on institutionalizing those processes, right? So having a process map and a playbook that isn't rigid, right? It can be flexible and change, but the trajectory of that needs to curve toward efficiency, right? So that you can, for every new hire that you bring in on the sales team, for example, they can hit the target metrics for salespeople within 6 months. It's not a 10-year process for somebody to get experienced enough to execute those plays. And I think that's one that needs to be understood either in the Series Seed round or needs to be learned between the Series Seed and the Series A.
I had a CEO once tell me that in this space, the rule is it should take 6 months to build and 6 months to sell. If it takes you longer than 6 months, you're building too much. And if you can't sell it in 6 months, you built the wrong thing. What's your take on that?
Yeah, I think that's an apt description. I think 6 months is a really long sales cycle, though. That would be harrowing to undergo if I was the CEO of or the VP of sales, and all of our sales in 6 months. You have to keep a pretty hefty pipeline to maintain that.
Yeah.
A sales cycle measured in days is much less of a stress.
Well, I understand. Yeah. So in the enterprise space, where do you see the immediate opportunities to pursue? Are there particular applications or sectors you think are hot right now?
Yeah, definitely. So again, I'm looking for industries that are in transformation, in some kind of transformation that we won't again see for a generation. And I think a good space for that right now are industries that are undergoing this sort of Moneyball trajectory, right? So at some point in the baseball industry, most of the folks on the operations team were baseball folks. They lived and breathed baseball for their entire lives. And after Moneyball and up to now, that industry has gone through a transition in which now the highest paid people in the majority of the team, the operational team, is made up of data science folks who have an innate sense of statistics and deep insights to be gleaned therein. So logistics, as I mentioned, is one one industry that's undergoing that kind of transformation, in which there's a massive amount of data to be gathered up and an immense amount of value to be gleaned if you can partition that data in certain ways and generate insights. The movie industry and TV industry is definitely undergoing a similar type of transition. Netflix is the large player in this space that already does a lot of this data crunching, and as a result, all of the movie studios need to do the same thing, just like Amazon did to the retail space over the past 10 years. Another one is the electricity industry, right? So this is sort of a tired industry that moves very slowly, but there's massive amount of opportunity if you can gather up data threads in local markets or on the household level. So that's one sort of hypothesis, is that this Moneyball trajectory is taking place in a number of different industries. Another one is that this blockchain and cryptocurrency space is offering some kind of new opportunities that have been touted as the solution from everything from saving the world to tracking the movement of everything. So I have a hypothesis in the blockchain space. I think that there's the potential opportunity for consumers to not only have a stake in companies in a traditional sense by owning shares in that company itself, but crypto tokens have the added benefit of offering you a stake in the network itself of the company. So if I was in the offering a token for Instagram 5 years ago, and as a consumer, if I offered you a few dollars every month for your participation in Instagram, the studies show that you would have increased retention, but you also would potentially gain from the strength of that network effect growing over time, right? So if I paid you those dollars in a crypto token, in the Instagram token, for example, you would have the opportunity to not only have that income on a regular basis, but also speculate on the value of that network growing. So that offers some interesting ways for consumers to participate in the growth of a company other than stock ownership. So I'm looking for opportunities in that space, and also this Moneyball hypothesis.
Well, that's great. Well, in the last few minutes that we have here today, what else should we cover that we haven't?
Well, I like what you guys are doing. I like the investor education aspect. I think that it couldn't be more important for the edification of folks in the space, and getting dollars off of the sidelines couldn't be anything but positive. And I really like the deal flow that you've established, and I think you're doing some great things to help the space.
Well, great. Well, I appreciate that. So how best for listeners to get back in touch with you?
Probably find me on LinkedIn, and then my website, as you mentioned, you would distribute. There's a contact us page there. So rarely do we make investments in companies that come across the transom, but I'll talk to anybody. So
great. Well, we'll put those in the show notes, and looking forward to having you back for an update soon, and appreciate your taking time.
Great. Thanks so much, Hall. Thanks for your time.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.